Hello, Shay here with Kessler Financial. One of the biggest tax misunderstandings I see is people mixing up itemized deductions and business deductions. They sound really familiar, but they work very differently, and confusing them can lead to missed deductions and IRS problems. So by the end of this video, you'll know which bucket your expenses belong in and why it matters. So, kind of a big picture overview. Itemized deductions are about you as a person, and business deductions are about your business activity. So, these deductions live in different places on the tax return, they're governed by different rules, and they impact your taxes in different ways. So, what are itemized deductions? Itemized deductions reduce your taxable income on your personal return. And they only benefit you if your itemized deductions are more than the standard deduction. Back in 2018, with the Tax Cuts and Jobs Act, the standard deductions doubled. And a lot of times it's more beneficial, especially on the federal return, for people to take the standard deduction instead of the itemized deductions. However, you do have the option, and usually tax softwares like TurboTax will help you optimize whatever is best. Here in Oregon, our standard deduction is a lot lower, so I often see taxpayers who benefit from itemizing on Oregon, but maybe not on the federal return, and that's okay too. But for itemized deductions on your personal tax return, things that you can itemize are your mortgage interest. So usually buying a house, especially with interest rates the way they are right now, are the thing that puts people over that threshold to where it might benefit them to itemize. Your charitable contributions are also considered an itemized deduction, state and local income taxes, and medical expenses above a certain threshold. So a lot of times those don't make a difference, but technically they are deductible above 7.5% of your adjusted gross income. So itemized deductions are optional. You either itemize or you take the standard. So you would add up all your itemized deductions. If it totals more than the standard deduction, then that would be a greater benefit, because essentially the deductions get subtracted from your taxable income before tax is calculated. So you are essentially deducting those amounts from your taxable income. So anyone, any individual could potentially itemize their deductions on their personal tax return. And like I just mentioned, the things that qualify as itemized deductions are your mortgage interest, property taxes, state and local income taxes, and charitable contributions, potentially medical expenses if they're over a threshold. So what are business deductions? Business deductions reduce your business income. So they apply to self-employed individuals, contractors, and business owners. They reduce your income before it even flows to your personal return, essentially. I mean, some business income gets reported on a Schedule C, which is a part of your personal return, but the Schedule C is kind of a separate form that reports your business income, subtracts out all your business expenses, also known as business deductions, to arrive at a net income figure. And that net income figure is what then flows over to the rest of the personal return and is ultimately assessed income tax and self-employment tax. Some common examples of business deductions include things like office supplies, your software subscriptions, business miles and vehicle expenses if you're using a vehicle for business, advertising and marketing, a portion of home expenses if you use a dedicated space in your home as a home office. Kind of a general rule to think about when you're thinking about business deductions is it ordinary and necessary for your business to operate? If you can answer yes to that question, then most likely we can find a way for it to be a business deduction. So yeah, the contrast points are where they show up on the tax return, who qualifies to take them, whether the standard deduction is going to affect it or not, and audit risk. So you can take business deductions and still take the standard deduction if you're self-employed or you have 1099 contractor income. Business deductions don't compete with the standard deduction the same way that itemized deductions do. Some common mistakes that I sometimes see are things like calling personal expenses business without having a real business purpose, trying to deduct charitable giving as a business expense. Unfortunately, that's not a deductible business expense. It is an itemized deduction that you can take, but if you do charitable giving through your business, it's not actually a business deduction. And I have a strategy and a way around that if you're interested. You can book an advisory session with me, and I have some good ideas for tax saving strategies around that type of thing. Sometimes I see people thinking that they didn't itemize, so they lost their business deductions. That's not true. Those two things are completely separate. And then a last thing that I see sometimes is not tracking business expenses at all because you figure that your accountant will figure it out or your CPA will figure it out. Tracking your expenses is kind of a bookkeeping thing. And while a lot of accountants, especially years ago, used to do both, anymore it seems like it's hard to find someone that's going to do your bookkeeping and your tax return. I only do taxes. I know lots of great bookkeepers that only do bookkeeping, and we can collaborate and we can get both done for you and make it feel like it's done under one roof. But ultimately, I'm not doing any bookkeeping or accounting, so you can't come to me at tax time with a box full of receipts. I just don't have the time or the employee manpower to perform that service in addition to the tax return. So I need you to come to me with your expenses already organized and summarized in some sort of system where you can provide a profit and loss statement for the business. Sorry for that little side tangent there when we're talking about deductions, but overall, it's good to have an understanding of this to help you not overpay in taxes and just kind of understand the difference between those two things so that you can maximize your tax savings. Um, so yeah, people, if you're a small business owner or some have some sort of side hustle, realtors, contractors, creatives, anyone who's newly self-employed, these are great tips to help understand what things you can deduct and how that works on your tax return. So if you're not sure whether something is a business deduction or personal, that's where getting good advice matters, and I would love to help you navigate that. Please feel free to subscribe to my channel here where I try to post educational content. I also have a newsletter over on my website that you can subscribe to. And as usual, I always offer advisory sessions, which can be a great resource where we can meet one-on-one and get all your questions answered, give you guidance, and just kind of point you in the right direction. So here at Castler Financial, we believe that clarity creates confidence, and we want you to feel confident and we want you to not be so stressed out at tax time. So if we can do something to help you out and alleviate that, then we would love to be a resource for you. Thanks for watching, and we look forward to helping you save money on taxes.